One crazy week of earnings is over, and now we have another one. So get ready for next week, and let's start this market outlook with the earnings calendar for next week. So as you can see, I have highlighted earnings in blue and red. The red earnings are the ones which are, the trillion-dollar companies, Amazon and Apple. So as you know that just like what Microsoft and Google did to the markets last week, Amazon and Apple are capable of doing that next week. Watch out for these two crazy market movers on Tuesday and Thursday. Now, in addition to this, all the stuff I have highlighted in blue, these are stocks in our watch list. So there is a lot of activity going on throughout the week, and these are also market movers on their own. But I'm just comparing them to Amazon and Apple, and they fade by comparison. But as you can see, NXPI, AMD, you have SMCI right below that, then LLY, Etsy, MasterCard, all these companies, these are significant market participants or significant portions of market indices that are reporting earnings next week. So as if that's not enough, now let's switch to the market calendar. Okay, so looking at the next week's macroeconomic calendar, there's a bunch of humdrum stuff coming out as usual. PMI, employment cost index, consumer confidence. But the main thing next week is the FOMC interest rate decision, the FOMC meeting on Wednesday at 2 p.m. So as you know, this is a huge market mover. And again, markets are not expecting any cuts in this meeting, obviously any rate cuts. But more than the rate cut decision, what the markets are actually looking for is the Powell conference at 2:30 p.m. Eastern. And they'll be looking for clues as to what Powell has to say about upcoming rate cuts. Is the June rate cut off the table? How many rate cuts do we expect? Based on the CPI, PPI, all these reports that we have seen in the past, my guess is that he should ideally, I hope the Fed doesn't get influenced by politics, because they are an independent agency. But so by the way, that brings me to this book I'm reading. It's called Maestro. It's a really good book on Alan Greenspan's tenure as the Fed chairman. And if you read the book, it's a very interesting book. And if you are interested in how all these macroeconomic data work, how the Fed works, it reads like a story, but you can learn while you're reading a story. So I'm really enjoying this book. Read this if you're interested in this stuff. And I'm promising, within the first 10 pages, like before even starting chapter 1, you will see how subtly politics can affect the Fed. Although they maintain that they're an independent agency. But read that book, you'll find it interesting. Anyway, so let's go back to the calendar. So the markets will be looking for what Powell has to say about the upcoming rate cuts. I'm hopeful that he is reading the data that's been coming out, which is clearly pointing to sticky inflation. The Fed has raised interest rates, 11 times. They haven't broken the economy. Job market is relentless. Retail spending is relentless. So there is really no reason for them to cut rates. The only reason why Fed cut rates is when they have an adverse impact on the economy, which hasn't happened yet. There is no recession. There is nothing that is happening. Even the real estate market hasn't cracked. So I don't see any reason for them to cut rates. But this is my humble opinion. Let's see what he has to say. But whatever he will say, that will move the markets on Wednesday. So just watch out for that event. Okay, time for us to look at some charts. So this is the chart of SPY. And when the market started turning, I had started projecting downside targets using Fibonacci retracements. Watch my previous videos. And I had mentioned that, if you remember, that 495 is what I expect where the market's SPY will drop before it bounces back. And it literally went to that level and bounced back. So it bounced back at 493. So pretty close to where I was expecting. And obviously this has happened because of Microsoft and Google earnings. Now, one interesting thing is, although we are getting this is a pretty significant bounce, and the only thing we need to watch out for is this level of resistance, which is coming up really quick. So 512 is a level of resistance, because the thing, if you look at this, obviously we are in a downtrend, right? So that the trend has, the market sentiment has shifted, we are in a downtrend. And when markets fall like that, things don't go up or down in a straight line usually. So when markets fall rapidly like that, you do get relief rallies. And until now, this is still a relief rally in my opinion. And how will we know when this relief rally actually turns back into a bull market? Is when we cross this threshold, the resistance which is coming up around 512 on SPY. So watch out for that level, and this can happen next week. So either Amazon earnings, it could be Powell giving a dovish statement, or it could be Apple. So any of these three events could cause this, but what we are watching for, it doesn't matter which event causes this. We are watching for this price level of 512. If the markets go past this resistance level, then you could start entertaining some bullish trades. So again, it's going to be a very tricky week next week, but if you are a price action trader, just follow that level and watch out for a breach of that resistance level. So let's move on to some divergence indicators. So let's look at VIX first. So with VIX, we had this massive spike to 21, and then Microsoft and Google came out with their earnings, and then VIX has been crushed below 15. We are back at 14. So for anybody who's bearish in the markets, this is not good news, because VIX got crushed in the matter of 3 or 4 days. But again, next week is another crazy week. So just because VIX got crushed doesn't mean that we will stay here. So there are a lot of events happening next week which could completely change market direction. So VIX is showing signs of pullback, which means equities could go up. But I want to show two more things here. So the two other indicators I watch is US dollar index DXY. So look at DXY. DXY had a minor pullback and is shooting up again. This is really bad for equity markets, especially growth. And then finally, let's look at TNX, which is the 10-year Treasury index. TNX is constantly going up. So that is another bad news for the equity market. So watch out for these two divergence signals. They are going up, DXY and TNX, while equities are trying to bounce. So things are not very clear right now. So the three important things to watch out for next week are Amazon earnings, Powell conference, and then Apple earnings. And then if you don't want to be bothered by all this noise, if you're a price action trader, just watch the level I showed you on SPY 512. If we get a breach of that level, then this pullback is over. It was a really minor pullback. I think we got just 5.7% pullback. We didn't even go to my first downside price target of 6.5%. And obviously this is not a correction, because a correction would represent SPY falling to 470 or below. So watch out for that price level. I will tell you that was it just a minor blip, And if any of the major events next week cause the markets to drop before it hits this resistance level, then I'm pretty sure that we'll take out the 6.5% pullback and we are headed to a correction. So keep your fingers crossed. Let's see what next week brings.